Hello and welcome to Let's Talk Business. Nifty and Sensex end the day on a muted note with a whole volatile opening. Banks remain under stress, dragging Nifty Bank to settle below the 44,000 level. Meanwhile, buying seen in the tech, media and metal sectors. My colleague Hiral Dadia joins us with the market wrap.
A pretty interesting day of trade is what we've seen in today's session. Clearly, if you go to see, we've closed absolutely near the flat line, and this was mainly because the financials have continued to underperform in today's session. In fact, it was the IT as well as the real estate players which actually were the gainers today. Mid-cap outperformance did keep the market breadth overall in favor of the advances. So that's the overall trend, and clearly it's the private banks and the NBFCs that were under pressure. The Sensex managed to close around almost 99 points higher, whereas the Nifty ended at levels of around 18,600. So that's going to be a crucial level that we will continue to watch out for as well. Overall, if you see oil marketing companies, they surged in trade today. You had a lot of other counters in terms of IT, wherein TCS, Infosys, as well as HCL, all the three counters did see some buying interest that was coming in from in terms of the IT majors. Clearly, if you see in terms of, let's look at the top gainers in today's session, BPCL, HCL Tech, Infosys, NTPC as well as Adani Enterprises. These were the top gainers in trade, whereas on the losing end, you had a Power Grid, L&T, Cipla, Titan as well as Maruti. Stocks like BEL and HAL actually hit a 52-week high today. From the power space, you had a NTPC and PFC as well as a REC that hit a 52-week high. In fact, if you see in terms of the peak power demand, that's at a record high as well in terms of the 9th of June data that we've been picking up. TVS Motors was another one that hit a high as well in today's session. Let's quickly look at few of the newsmakers. ABB, now they've got the highest target price after a UBS upgrade, and they've got a increase to 5,000 rupees per share, which is implying a potential upside of almost little over 20%. Kaplan Point was in focus as the US FDA has given them an approval for a muscle relaxation injection. KC was in focus as well, and this is on the back of a buy call by Nomura for a target price of 598 per share. Easy Trip Planners, that counter gained in trade on becoming, a paddle tournament's official travel partner, so momentum on that counter as well. GHCL slumped in trade, and this is after listing post the demerger. Coforge was an interesting one as well because Coforge and Fundmore have partnered for automation solutions for mortgage lenders in Canada, as well as the commentary from the management at the analyst meet was quite positive with regards to where the demand goes, where they've been positive in terms of the constant currency growth as well. So good numbers coming in there. Avantel bagged a contract on the back of which some smart moves was seen on that counter. Delivery has been an interesting one. In fact, the logistics space has been buzzing over the last couple of trading sessions, and Delivery jumped in trade today after a large block deal trades as well. Maharashtra Seamless, they've gone ahead and prepaid a loan on the back of which there was great momentum, and now the company has become debt-free. And you have MRF, which is now back above the 99,000 mark as well. So clearly a lot of movers and shakers, a lot of individual stock-specific action is what we are seeing. But there is some bit of nervousness that prevails in the market, specifically from a banking name perspective, because ahead of the FOMC as well, there is no major direction that the investors are willing to take, and that's the reason why we are seeing these kind of sideways moves. But the stock specific action continues to remain. So the next couple of trading sessions are going to be extremely crucial as well to understand the underlying trend. But the tone still continues to remain positive is what analysts are indicating so far. Back to you.
Right. In fact, market expert Bhavin Shah believes that large cap IT companies may not give the desired results due to persisting muted growth clouding the tech outlook. Investors should look for mid and small cap stocks for better opportunities. Let's listen in.
I think large cap IT, I think what they face is overall, their size limits their growth potential. So they become great opportunities either because there is some temporary blip in the growth rate, as was the case around COVID, and there was a big correction also. So both of the things combined made them interesting investment choices. Or if there is some bit of turnaround in the company, in the way they are looking at business, the way the management is the change in management or how they are thinking about, their future growth strategy and their focus on shareholder. So in that regard, we do find one or two opportunities in the large cap IT as well. But I think we are doing that, being aware of the fact that the growth rates for those companies will be subdued compared to what we saw in COVID. And I think one has to be realistic in terms of return expectation as a result of that. If somebody wants, say, low teens, 10, 12% return, maybe, I think it is still possible in some large cap IT. But I don't think we are going to get much higher rate of return from that.
And on to some news from the global banking space. Swiss bank UBS has concluded its merger with its embattled rival for $3.3 billion. BQ Prime's Vishwanath Nair has all the detail.
In what will turn out to be the largest banking deal since the global financial crisis of 2008, UBS, the Swiss major, has actually completed the acquisition of Credit Suisse. Now, of course, this is being termed as a merger, but essentially UBS will be taking over all of Credit Suisse's businesses around the world and thereby creating one of the largest banking conglomerates in Europe. Essentially, what is going to happen is that UBS's total balance sheet strength is going to rise to about $1.6 trillion. It will control about $5 trillion worth of assets, and its employee base is going to rise to about 120,000. That's a lot of people to be working in a banking conglomerate anywhere around the world. Essentially, what UBS intends to do with this business, with the Credit Suisse business, is to leverage as much as possible on the wealth clients that Credit Suisse manages, however, cut back on the investment banking business, which is what essentially landed Credit Suisse into hot water. Remember back in March of 2023, essentially Credit Suisse had gotten into a lot of trouble with its depositors because depositors started withdrawing money as much as $10 billion from Credit Suisse after it was involved in a lot of corporate collapses. This merger was essentially created by the Swiss regulators to protect the depositors of Credit Suisse, and right now we have one of the largest banking conglomerates in Europe.
Right. And a relief call coming in for the power companies. Power Ministry today has decided to extend deadline for the plants using imported coal to operate at full capacity till September. My colleague Vikas Srivastav joins us with more information on this circular.
Yeah, the government has extended the deadline for the imported coal power plants to import the coal now till September 30th. Earlier, this extension was done after January from March 15 to June 15. So, this extension, what it will do is it will provide the comfort to the country in terms of shortage of power that we faced in 2021 and in 2022 as well. So, after that, what government had done was that it had brought in the section 11 of Electricity Act 2003, under which all the imported or the coastal based power plants were asked to import coal to run their power plants at full capacity. Now, because of this shortage, these companies were also given this facility to enter into power purchase agreements with the DISCOMs at higher rates, or as a compensatory tariff they were given higher rates, because after the Ukraine war, what had happened was that the global coal prices had peaked to almost $400 per ton. So, because of that, most of these power plants or the coastal power plants, which included UMPPs like Tata Power's Mundra power plant or Adani's 4080 megawatt power plant in Mundra, as well as SR's 1200 megawatt Sasan power plant, to run at very low steam, or to most of them were shut down also. So, after this provision was introduced and they were forced to run the power plants, so Tata Power was running at least 3 units of its UMPP, while Adani has been running most of its power plants properly, and even SR. So, till September 30, why government has done it, most of the analysts are expecting that this will be extended for the next year as well, because general elections are coming up and government does not want to face similar situation as it did in 2021 and 22. So, almost 20,000 megawatt of capacity will be upstream and full capacity will be running. As expected, the peak power demand has also gone up on 8th of June to 222.9 gigawatt, which is historic record that we have got till date. And this government had estimated that will go up to 229 gigawatt by June. After that there will be monsoon, but after monsoon there will again be pickup in demand. So government does not want to falter on that. So I think this will continue for next year, and the extensions will be given after every 3 months.
Well, in India and the United Arab Emirates have set a goal of $100 billion for non-petroleum trade in the next 7 years. This target was set at the joint committee meeting held by both the countries. Janani Janardhan gets us more.
Today, India and the United Arab Emirates concluded their first joint committee meeting on CEPA, or the Comprehensive Economic Partnership Agreement. Now, the CEPA was signed a year ago and came into effect from the 1st of May 2022. As this agreement now turns 1 year old, the two countries discussed on how to solve teething troubles and also promote further bilateral trade. A part of this is actually an increase in the bilateral trade target. The two countries have announced that they've mutually agreed to extend or increase their bilateral trade target to $100 billion by 2030 in non-petroleum products alone. Another increasing development that we've got from here is the rupee dirham trade talks. The two countries have been engaging in rupee dirham trade talks from March 2022, and it is said that the Indian Finance Ministry is also part of this. They are looking to operationalize this between the two countries before expanding it further. Now, as part of the trade talks, they're looking at improving India-led exports in sectors such as pharma, textiles, footwear, furniture, furnishings, among others. But most importantly, when we talk about the non-petroleum trade that is extended or increased, we're seeing that currently $48 billion is where India's trade target with UAE is currently at. But by 2030, that is in the next 7 years, if the trade target increases to $100 billion, this would certainly bode well for India. That's all we have for you from this location at this point. Back to you.
And after the meeting, Commerce Minister Piyush Goyal said both UAE and India have made substantial progress in rupee dirham trade. Let's listen in.
The germs of this rupee dirham trade were actually sown in that meeting. It's just about a year since then, but both countries have made significant progress. The Reserve Bank of India and the Central Bank of UAE have been in very active dialogue. The Ministry of Finance is very supportive and handling the entire issue, and I'm sure, given the high level engagement on both sides, given the active pursuit of working together, not only on rupee dirham trade but also on other digital technologies becoming a part of the UAE-India framework, I think we have very good things which will be offered to both nations in the coming months. We will await the final outcomes and the decisions.
Well, that's all we have for you from the world of business. Thank you for watching.